Hello, everyone. Hello, sir. Welcome back to a new episode of Decoding Markets. Good to have you back after a break of 1 week almost.
Yeah, nice to be back in Mumbai. But actually, I like the climate there because you don't get 22 to 25 degrees with low humidity ever out here. So the
Right.
pleasure of walking on the street with a jacket or without one or not sweating too much uh, is something I miss already. Maybe I
Nice,
should
sir.
move to Bangalore. Hmm.
Right. It will be a great decision. It will be a great decision for everyone. So, welcome back. Welcome back, everyone. So, the market doesn't care about your emotion, your logic, your reason. It moves on its own term. And our
Absolutely.
job is to decode them, right? So, welcome back to the decoding markets. So, just don't follow the noise. Let's break it down. So, let's get ready with your questions, guys, because we will be taking three of your questions and Sir will be answering them. Let's cut the chaos and move to the questions. So, the first question for you, sir: how do you describe the current market scenario and what would you say on the evolution of the Indian stock market?
Ooh, evolution is such a long answer, for my generation who's seen too much change, in every space from technology to mobile phones and stock market. Everything has changed from what it was. If you tell our kids we grew up like this, they're like, "What are you even talking about? That world doesn't exist." So people are used to online trading. Click of a button, money moves from bank. Just not possible in 1991. You didn't know what the stock market price was till the newspaper was printed next day morning, or you were around the exchange buying something known as a bhav copy, which was printed by the exchange and sold for 1 rupee outside the exchange on the street if you wanted to know the price at 5 p.m. If you placed an order to buy a sell in stock in the morning, you had to call your sub broker before 10 o'clock, and he would take that order to the ring, place it, get you the confirmation, and let you know by 5 in the evening that yes, your order was executed. Now people are used to knowing that within nanoseconds.
Right.
So so the world has changed so much that if we start talking about it, it's like a full podcast. That's how much the stock market has changed in terms of evolution. There are too many things that have changed, too many, for good,
Agree,
of
sir.
course, for
Hmm.
good. It takes away unnecessary speculation, because in that format you would always feel cheated and manipulated. Now at least you have anytime always access, so it just comes down to your intelligence and your mental capability to be in this market. It's a real test of that, and I think even this recent period and this month, for example, has been a test. It's testing my nerves, so I can just imagine how it's impacting others.
So it's been a long, long way the stock market has come and the things. And today's market scenario is really, actually, this month, it's been too low. There is nothing. So moving to the second question, sir: why do stock fall even after posting great results?
So what happens in the market is that many times things are discounted, but not always. I mean, say for example, we started this season with tech results, and moment the TCS results came, the stock fell. But at the same time, today you are seeing HDFC and ICICI going up, even though people will tell you that HDFC Bank's results were significantly supported by sale of HDB Financial, which is one of their companies they own. So it was other income. And some stocks which show other income fall, some stocks which show other income rise, and therefore it becomes slightly unpredictable. So it has a lot to do with how people are positioned there. So rather than trying to come up with any logic as to why the stock did so or didn't do so, because it may not necessarily move as per the result, and sometimes it will open down and then close positive on a bad result also. So the reason is purely how people are positioned ahead of the event. If they have already managed to anticipate it, then prices do the opposite. I have seen that kind of behavior for decades in companies like Tata Steel. They often disregard bad results. So, beyond a day or two, and then they rebound so hard, you're like, what the heck? It was supposed to be a bad result. Sometimes you get that impact even intraday. So so the thing that we were told long back when I was on a trading desk 25 years ago is you had to monitor result dates. On a result date, you should have no position open, because the stock just moves wildly in one direction or the other. We don't try to predict it. Unless you have very good insight, you have very good research analysts and have very good insight on what direction could unfold. And if it matches with your chart, sure, you take a bet. If the knowledge and charts are on one side, that can work. But otherwise, mostly if you're not that closely aware of how and what the numbers are going to be and what it means for the market, it's best not to have a position on a result day. As much as it might be tempting when you see a 4% move this way or that way, it's often not worth it, is the lesson learned.
Right. So, moving to the next question. So,
Yeah.
on Friday, the USDINR is at an 61.8% retracement. And as per the Elliott waves and your theory that you posted, it was in wave A of the market chart. So, what was your take on that, sir?
Wait, I didn't.
Because,
I didn't fully get the question. So see, you're saying USDINR, right?
right,
Okay, sorry. So USDINR, see, essentially what we thought is that it fell in 5 waves recently, and then it started to bounce back as the market was falling. Now on Friday, I noticed that the bounce has reached 61.8%. Now typically a B wave is 61%. Okay, so today it has stretched a little more, maybe to 66%, when this is how the behavior usually is. So when we see a 5-wave fall, the first from a top or from a interim top, we mark that as wave A. And then when we see a retracement, we mark that as wave B. So we end up anticipating that, okay, maybe wave C down can unfold whenever wave B ends. And ideally it should end in that retracement zone. But that doesn't mean it can't do an 80% retracement or something, but that's what you watch out for. It hasn't happened yet in USDINR's case, but we'll be watchful whether the retracement holds and another leg down can start or not.
right.
Hopefully that will
So,
coincide with the market advance. I mean, that is the bigger thing.
so these were the three questions for today's market analysis and decoding. So it was a very short session today's. So guys,
So let me just spend a moment before
yeah,
people ask questions on the market itself, because something very interesting is happening, and like I said, it's been a pain point. On the trading side, on the investment side, it's been a breeze, and people are still arguing with me whether it's a bear market rally or not, and I've come on again and again and said that stay on the bullish side. And every time it gives up. So what gave up? Last 3 weeks we saw the Nifty fall. This Nifty fall has come on the back of large cap results, especially IT sector and now Reliance and so on not being up to the mark. And the second is on the back of fear that something will happen on the tariff front. So you had the deadline of 1st of July, and then India started to negotiate a deal which is still not come through. And there's a fear that the deal may turn sour in some ways. I mean, not completely, because Donald Trump is saying it's coming. But with the differences rising, the fear that we may not get the best deal. Now we don't know till it is actually announced what it's going to be. And my friend Palak at Business World wrote an article today. Like, one of the issues is import of Russian oil, and Reliance Industries is one of the biggest importers of Russian oil. I don't know if today's 4% market fall is attributed to his news or to the results alone. Because like you said, why is it down on good results? And is it just a quarter-on-quarter revenue? I initially thought that's not a great reason for a fall. If it's Y on Y, it's done well. I don't know what is the seasonal impact on a Sometimes there's seasonality also in certain earnings. So there could be more to it. And this story tried to pull out something saying that, they've been buying most of that Russian oil. And, would US try to take that away? And so there would be some kind of a market impact on that. But having said all that, at the end of the day, as an analyst, what do we do? Is not think about Reliance, but think about what do the indices look like. Small cap index, Nifty 500, mid cap index, bank Nifty. These are the key indices that we watch every day. And when I look at all of them, except for Nifty, which is fallen a little more, both in price and time, all the other indices have managed to hold their support levels. All the other indices are not breaking down. Okay. And the broad market has actually done well. Somebody messaged me on Thursday, Friday asking me, was my portfolio is going up? Should we be really worried about this index and Nifty? And my answer is no, because that's the same experience I'm having, that if you own stocks, especially in the broad market, they actually gone up over the last couple of weeks. And last week, the small cap index closed positive, not negative. Same with the mid cap. So it's only been the Nifty that has been a whitewash. So either we can say that Nifty is leading the way down, eventually everything will fall. But so far, everything is holding support so well, even today as it bounces back, that there is no sign of such a fall in the broad market indices. The alternate thinking could be maybe the Nifty is the smoke screen, creating the fear in front, while behind the scenes, accumulation is continuing in stocks that are showing earnings growth. So I was speaking to someone again in the morning today who was trying to highlight that no, earnings growth is continuing in all stocks that are outside of the Nifty large cap basket, whatever you put in mid and small cap. And of course, results for this quarter are not completely out in that segment. So that is the only thing to watch out for. But last quarter also, we saw that deviation where Nifty earnings growth was at 8% and large cap earnings, mid cap, small cap earnings growth was like 26, 27, 28% on average. That's a huge divide between these two segments. And that is where the performance came after April. So that's possibly the gap that we are seeing between these two, which is driven by this divergence in earnings growth. And therefore, when we see strength in the broad market as an investor, I feel comfortable. And then when I see weakness in Nifty as a trader, I feel uncomfortable. And this is the anomaly that is. And if you do both, then you're completely pulling your hair out. So this is what is going on.
That means both of them are going.
And the trader and investor having a different experience, and that is causing a debate between the bulls and bears as to whether this is a impulse and this is bullish, or whether this is corrective and it is an X. And it's going on even on our blog, and every day even I sometimes start questioning and ask, okay, maybe it is this. Then people say you're changing your view, and I'm facing this thing, and I finally then come back to the trade setup and I look at all the other indices and I say nothing's breaking down. So that's a note I just wrote some time back on Indiacharts on the app, that except for Nifty, which fell a little more, and today it's taken support at a 61% retracement of the last rally, a 66%. Same with Bank Nifty. Nothing's really broken any level. Nothing. None of the other indices. So apart from that, so then should we really be worried? Because worry is the easiest thing to do. And I know the fear of this tariff thing going wrong is very high. If he says, no, I don't like this agri thing and Russia thing, I'm going to put 50% on you. That is extreme. But I don't know what he's going to do, right? But markets must know. So when they are falling, we say markets know some bad news is coming. And then when they find support and bounce back, we feel that, no, maybe it's not as bad as we thought. So that's sort of how I feel today. It could have been bad, but so far it's not so bad as we thought. It's tricky.
You prepared for the worst, but the worst hasn't come. It was okay.
Yeah.
Okay.
And every day that same question and the same answer, because there's this unknown hanging sword.
You are just like sitting in the blank, expecting for the worst, and it's coming to the end, but it's not going too far. That is what is happening. Like it's coming up to here, but okay, छोड़ दे रहा हूँ.
Yeah, it's like I'm going to jump off the cliff tomorrow, and then like, no, wait, I'm still okay.
That is what is happening.
Yeah.
Okay, sir. So it's a very mixed feeling. It's a very mixed emotions and it's really a roller coaster what we are going through. Gonna jump, not gonna jump. Gonna
If
jump,
you have
not
to
gonna
deal
jump.
with both sides, like I said, if you have to deal with both trading and investing. Now, say for example, I was only investing and I just try to remove this Nifty trading thing out of the mind. And I don't have to think about that anymore. Then there's nothing. Then I can't find anything wrong with the market. That's the beauty of it. And that's why that bias is coming out so strongly. Some people don't understand why you sounding so biased bullish. My answer is go buy some stocks and then tell me if they come down. And that doesn't mean go buy Reliance. I'm talking about buy some growth stocks, not large caps.
Yeah. It's nice.
Imagine somebody who owned defense stocks at the start of April. How is he feeling? Defense stocks are up 30 to 50% in 4 months. Tell him that there's a
All
bear
is well.
market. He'll
All
probably
is well.
slap you. He'll
For
slap
them,
you.
all is
He'll
well.
say cost from here.
For them, I can just only say, all is well. All is well. Everything will be good in the long run. Yeah, sir. But yes, it's a very mixed emotion in the market going on right now,
Yeah.
because people are thinking about trading in perspective of trading. They're I don't know. They're around very much confused going around. Whereas talking about investors, they're all okay. They're all good. They don't have any problem. Nifty हटाओ, अपना portfolio बचाओ.
Yeah, absolutely.
That's the thing. So yes, it was a great discussion, sir. So let's move towards the questions. Right. So the first question coming from Mahesh is,
Metal stocks are giving some bounce, fizzles out very quickly. Can we expect a prolonged rally in metals? I see a good rounding structure in right around this. Yeah, I think so. Let me just I have not shared any charts today. Let's look at the metal index. I think it's good. It's actually held the support pretty well in this correction. Okay, I'll move to a day. This is a daily chart. Nifty metal there. So you see, it's nicely pulled up. I mean, the way I see it, yeah. So he's saying rounding. He's probably talking of this. I also have the averages and everything. So here it nicely held this average, didn't break, and the RMI is just waiting. It didn't give a bullish crossover. Maybe tomorrow, but I do sense, as I've marked over here, that this is wave 1 and 2. Initial advance is 1 of 3, 2 of 3, ready to take off in 3 of 3. So surely I think it's bullish. So far, nothing has happened to change that. Should be ready to take off. I mean, what affects commodities? Okay, it's the dollar. So the only thing again working against it is the dollar. The dollar did rise till here. It's a bit down, and bond yields are down, so that is a negative effect on dollar. But I think the dollar index on the weekly chart has room to move up a little more if it wants to closer to 100 or not 100 also 99.4 or something. Right now it's 97.7. So around 40 50 bips upside on the dollar index is a hidden possibility. If it doesn't happen, then it just continues the bearish trend. But if it does happen, that could be the only near term jitter for commodity prices. Okay, not necessarily commodity stocks. But if I look at copper, say for example, and we wrote about this last week, it's essentially formed a triangle, typically seen in 4th waves. So I've marked it as 4. That means we started 5. So copper prices are not showing any sign that we are going to fall right now. And so I sense that the metal rally should continue because underlying commodity prices are still showing a positive trend. Yeah, that's the cross verification. Next.
yes, so the next question moving to Anirban.
If possible, any positional view on Nifty PSU Bank Index till the end of the quarter amongst PSU Bank basket, blah, blah, blah. Within PSU also mid and small cap, arey ruko na yaar. So some people consider all PSUs to be small cap or mid cap. So I don't know how we segregate that, but see, if we look at the PSU Bank Index, where is it? It's slightly down today, but overall, I think I have not marked waves over here. But I do think that this may be possibly 1 and 2. Okay. After that, it was a little difficult. 1, 2, 1, 2, 3, 4, 5. It looked like a 3-wave up, down, or maybe a series of 1, 2, 1, 2, 3, 4. Something developing which is going on. It's like it's not conclusive, not over. The third wave, it's trying to extend and develop. And it should. I mean, it should somewhere take support at these. Like here, it held the 20. It's closed at the 20 today. Let's see if that holds. If it holds, we go straight up from here. If it pulls back a little bit, maximum you get maybe 1 or 2% downside, not more than that on the PSU Bank. But what is more interesting to me is this. This is the big picture. The bigger picture in the PSU Bank Index is we've come out of a fourth wave correction, which also has a complex pattern in it. Whether you mark it as ABCD or WXYZ, basically it's a complex pattern typical in fourth waves. So in the big picture, which is more relevant to me than what he's asking about just the month end, is that we're headed for all the way up here, maybe 13,000-14,000 on the PSU Bank Index. Could easily double over a period of time, maybe 1.5 year. So that is the big picture to keep in mind. Shorter term, sure, we can see, but like I said, it's making a series of higher highs and lows. So its downside should be limited. Now, mid cap always does better than large cap in any trend. So if that is a choice you have to make, is, and you get more volatility with mid cap. So that's an individual choice you have to make. More returns with more volatility. If you're okay, yes. If not, no.
So moving to the next question, it's from Sanket. So
There's a 5-wave downward pattern on Nifty daily chart, which looks like an impulse. Does it mean today's upside is only counter trend? First of all, I don't think it's 5 waves. Okay, so is my screen visible? Can you see me? Yeah. Okay. So I'm just going to go to Nifty and I'm going to go to the hourly chart. Okay. I'll go to the daily and hourly. I mean, you might think that this is 1 and 2, but we do try to do an analysis of the overall structure. Somebody may think, oh, this looks like 5, but we don't think so, because I initially thought this was only 3 waves, and in fact within that also I thought it was a WXYZ structure. So when I go to the hourly chart, I see something very different. Why we mark this as W over here is that this was itself a WXYZ or ABCD kind of a expanding pattern. So I initially thought this was the bottom, because we did this and it should have taken off, and then it went up only in 3 waves. So then I took it as X. This is a 5-wave fall. So this was a 5-wave fall. Initially I tried to think, can it be part of this and bottom out, but that was wrong. This 5-wave fall has resulted in B and a C, and C is also 1, 2, 3, 4, and today morning spike down here is the 5th. So here actually C is shorter than A. For those who don't know, basically C in this scenario, when it is shorter, it would be in some Fibonacci ratio. In this case, it is 0.618. Okay, of multiply by A. Okay, so when wave C is shorter than A, it's typically like a ratio like this. Okay, and that's what has happened. And then from there, we started to go up, and today we've come out of this falling channel. So now there are two things we can do. I can either say wave Y is over, and that means possibly 2 is over and we should start up. The bearish alternate would be that this goes up here, again becomes X, and we get something known as Z. Remember, Z is the last alphabet, and therefore Z is also the last part of any correction that happens in the market. So if there is an X and a Z, there will be a failure somewhere around 25,200, 300. If it doesn't fail over there and breaks out beyond that, then we are done with the correction, and then we've resumed the upward trend. This is my sort of view, but I don't think this is a 5-wave fall. So that is the basic. It's a complex correction. If you're not used to counting complex corrections, then definitely you will find it hard to really do, but that's what it is.
So we have the last question for our sessions today. So it's again from Mahesh. So
There was a rising wedge breakdown in Nifty daily charts yesterday and today. It exactly ending at the retest of the breakdown. Rising wedge in Nifty Bank daily chart yesterday. So that would have been a fourth wave at most. Okay, because fourth waves are triangle wedgish type of patterns if you're looking at the intraday chart. And the fall would be the fifth of the structure. So that's sort of why it did that. And that's about it. That's all I have to say about that. But he's saying in daily chart, so I don't know. Nifty Bank daily chart. I mean, he's saying yesterday. A one-day candle cannot be a wedge, right? A wedge involves 10, 15 candles. So I'm a little confused about what he's trying to say. So that's why I referred to intraday.
So guys, it's a request to everyone. Anyone who is asking a question now, please ask it in full terms so that we can also get the perspective of your question and we can get an answer that is much more giving you the clarity of what you are asking. So for giving you the clarity at first, we should have the clarity of what you guys are asking. So the question that you guys are asking should be it shouldn't be an open-end question. Flag and pole. So there is another question. Should be
the flag and pole.
Right.
The flag and pole guy is back. Okay.
So,
I don't know if it's a flag and pole on the monthly chart because it looks like the prices came down. So first of all, it's not a flag. Oops. I mean, there is a rise which you can call a pole, but that sideways movement is not a perfect flag. A perfect flag is something that moves inside a channel. So I can't see that. Yeah. Not on the monthly at least. Unless you say the sideways movement on the weekly is a flag of some kind. I mean, monthly is not a flag. Oof. M&M is a deadly chart. Deadly stock also.
So thanks everyone. Thank you, sir. Let's call it a day.
Yeah.
So that's a wrap up for today's session. Let's meet on Wednesday, same timing on Indiacharts. Thanks everyone. Thank you, sir.
Thank you.